Good afternoon. Myself, Professor Gaddam Naresh Reddy, Professor of Commerce, Usman University, Hyderabad, and my friend, Professor Sanjeeva Rao here from Brahmos Vivekananda College. We are going to discuss the JL and DL Gurukula, the subject related to commerce. So, paper 2 is commerce, which we have to discuss today. Now, in commerce syllabus, 10 units are given here. So, each and every unit consists of a separate subject. Now, the first unit related to financial management. Now, we have to know what do you mean by a financial management, what are the functions of financial management, scope of financial management, and the objectives of financial management. Like that, the topics which are included. Now, we have to move on to the second unit, financial and management accounting, and the third unit focusing on cost accounting and control, fourth unit managerial economics, fifth unit organization theory and behavior, sixth unit marketing management, seventh unit human resource management, eighth one is business environment, ninth quantitative techniques, 10th one is IT and e-commerce. Now, in the case of JL, we have not included the human resource management, business environment, IT and e-commerce. These are the 3 units which are not included in the JL examination, but in DL examination these 10 units are included. So, out of these 10 units, the question paper will be prepared, and according to that, here we have to answer, and all the questions are multiple in nature, that is, we will call it as MCQs, multiple choice questions. 4 alternative answers are given. Out of the 4 alternative answers, one answer is the correct answer. So, that correct answer we have to tick it now as per the examination pattern. Now, we have to move on to the each and every unit. The first unit talks about financial management. Now, in the case of financial management, before that we have to focusing on what do you mean by a management. So, management we know very well is the art of managing the different things or the events or activities. Art we will go by management is the art and science of managing the activities. So, management is a big subject. Out of we have primary functions and secondary functions. In the primary functions of management, we have post carb, the word which is not having any meaning, but when you expand this, we will have planning, organizing, staffing, directing, controlling, coordinating, budgeting, reporting like. These are all called primary functions of management. But we have to focus on the secondary functions. Under the secondary functions, we have accounting, we have finance, we have costing, marketing, production, human resources, IT, like that. These are all the different secondary functions of management. So, out of these secondary functions, the finance is playing an important role. So, any function which requires the financial resources. For example, if we want to produce a product or render a service, the money is required, or if you want to acquire the fixed assets, money is also required. So, it may be the day to day activities or maybe investment activities, the amount of money is very much required. So, for that the finance is playing an important role in any organization. So, financial management here we have to focus mainly on the corporate finance. So, generally finance is having different types: personal finance, corporate finance, public finance like. So, we have to see what do you mean by a corporate finance, and what do you mean by a personal finance, and what do you mean by a public finance. So, corporate finance is the amount of money or the funds or the financial resources which are required to the corporates or the business houses. So, it may be a sole trader, it may be a partnership firm, or maybe a joint stock company, or any even multinational companies. So, the finances which are required to the multinationals, which are comes under this corporate finance or the financial management simply. Now, not only that, here in this particular financial management syllabus, the syllabus which is related to the domestic finance, not the international finance. International finance activities which are not included in the syllabus. So, we have to stick on to the domestic financial management here. Now, under this, what do you mean by a finance? So, finance is also the arts and science of managing money or the financial resources of any corporate entity. Now, the other two aspects also we have discussed. What is that? The personal finance. The finances of an human being or an individual or a family, which is not part of our syllabus, and not only that, the public finance also, which is not included in our syllabus. So, we are very much stick on to the corporate finance. So, based on this, what are the objectives of financial management? Now, the financial management, two important objectives or goals which we know very well. So, profit maximization and wealth maximization. So, we know that what is profit maximization. So, the amount of profits, any company which requires the amount of profits, if the profits are there, companies will survive in the long run. So, even every company, they are going to declare the quarterly results, half-yearly results and yearly results. Now, in these results, the investors are waiting. Not only investors, many stakeholders who are very much directly or indirectly related or they linked with the company activities, they are very much interested in the case of the announcement of the financial results. So, according to that, the companies will announce the results quarterly, half-yearly, yearly like. Now, in that, the majority of the stakeholders, they will focusing on the amount of profit declared by the company. So, what the company which is expected previously and what is the real amount of profit which is earned by the company. Now, according to that, the investors also will compare and companies also compare. Now, internally they will also take decisions based on the financial reports which are prepared by the accounting department. Now, according to that, the profit maximization means earning as maximum as possible the amount of profit over a period of time. Now, for example, if a company may be a startup or if a company may be started with a period of 3 years, 4 years, 5 years like, generally they will not have the amount of profits because they require a break even period, and according to that they will incur the losses. If the companies are having long history, for example, the TCS, ITC, Infosys, Wipro like that, these are all the companies which are already promoted 20 years back, 30 years back. For example, you can take ITC is more than 100 years a company like. So, they expanded their operations into various sectors, and according to that there are so many factors which will influence the amount of profits which are earned by the companies. So, this is one important concept which we have to learn in the financial management, which is called profit maximization. But the profit maximization which is having an important limitation. So, what is that limitation? Generally, in the case of financial management, we will talk about the three important functions. So, the three important functions are financing, investing and dividend. Now, we will also try to expand it to risk and return analysis. Now, these are all the decisions or the functions which requires the time value of money. Now, in accounting, the time value of money which is ignored, because whatever the transactions which are recorded in the books of accounts or in the finance statements, these are based on the historical cost concept basis. But here is we have to focus on the value of the money today is how much, value of the money tomorrow is how much, or value of the money. For example, a company which may be invested in a particular project. Now, the project life may be 20 years. This project is going to generate the cash flows, which is called cash inflows. Initially, we will invest that amount of money which is called cash outflows. So, this cash outflow will be recouped over a period of life of the asset or the life of the project or the investment. But today whatever we have invested, that value is called a present value, right. Now, based on that, this money which is recovered in how many number of years. For example, a project which is generating 10,000 or the 10 lakhs rupees per year, now for 10 years. So, 10 lakhs rupees in the first year, 10 lakhs in the second year may not be one and the same, because this is called time value of money. Now, we will discount the future cash flows based on the normal rate of return or the interest rate which is there in the market. Now, according to that, whatever the value today is there and whatever the value after 20 years is totally different, because of so many factors. For example, inflation and other factors which will influence the worth or the real worthiness of the money, and according to that we will discount here. Now, this is ignored in the case of profit maximization concept. Now, that is why whatever the profit here we are expecting according to accounting is totally different come to the finance. Now, not only that, the investors and the stakeholders which they focus on the maximization of the wealth. Maximization of the wealth of the stakeholders is the order of the day. Now, the wealth should be maximized. Now, wealth should be maximized means, now whatever the future cash flows here we are expecting, that will be converted into the present value, and according to that we will have different techniques or the tools which we have to work out for the purpose of is this project is feasible or not. Now, based on that we will go with different techniques which is called here we are call it as a capital budgeting techniques. So, like that here I want to give the brief of financial management here. In addition to these two objectives, so ultimately the objective is maximization of the wealth of the stakeholders. Now, even the meaning of stakeholders is totally different. Previously, we will call it as shareholders wealth maximization. Not only shareholders wealth, now whoever connecting or connected to the company, all these players wealth should be maximized. That is important. For example, the employees which are working with the company, they will expect more amount of salaries, or and not only that, the customers which they will expect at a lesser price, it may be a product or service, and suppliers they will expect their amount of money which will be received within a short period of time. Now, like that the investors wants more amount of returns. Now, if you want to satisfy all these stakeholders interest, now the stakeholders interest is to get some benefit out of the results of the company. So, which will be we must try to create the wealth of the company over a period of time. So, that is why the focus of this particular subject is how we have to maximize the wealth of the stakeholders. That is the ultimate idea which is there in the case of financial management. Now, according to that we will have three important functions which I already shared with you. One is financing, another is investing, and the third one is the dividend. Now, whatever the activity a particular company wants to take up, so they require the money which is called the financial resources. So, from where we have to mobilize the funds? The funds will be mobilized internally as well as externally. If the company which is already existed, they may be having accumulated profits which are also called return earnings. Out of the return earnings also they will try to invest. Now, that is why the money which is raised through internal sources or through external sources. Now, external sources you know very well. Now, issue of shares, debentures, preference shares, and various other innovative products to the different prospective investors. Now, this is the way the funds which will be mobilized by the company. So, ultimately what is important here? The company wants to mobilize the funds at a cheaper cost. So, where the funds are available at a cheaper cost, that source will be tried to selected by the finance manager. That is the ultimate aim of this. So, funds you can mobilize, but the cost will be minimum or the cost will be less. Now, that is the main intention of this, and sources are there, cost also we have to try to consider. And the next part of it is, here we have to focus on the investment. So, investment is, we can have the long term investment, short term investment. So, short term investment is nothing but investment in current assets. Investment in current assets is called working capital management, and the long term investment which is called investment in fixed assets, which is called capital budgeting in the financial management. So, these are the two broad aspects which will comes under the investment activity. So, for the purpose of day to day activities, or the company wants to maintain the day to day operations or the expenses, this is comes under working capital, and company wants to produce more number of goods or render more services. Now, according to that, they require the money which will be invested in the different fixed assets. It may be building, it may be the trucks, it may be machinery, it may be equipment, it may be furniture like. So, whatever the facilities which we require, and this investment will generate or offer the benefit to the company over a longer period of time. So, which is simply call it as according to the life of a particular investment or the asset. These assets will be used by the company, and they will produce something, and they will sell in the market, and they will get the revenues, and according to that they will compare the cost and revenues, how much profit a company which is earned over a period of time. Now, this is about investments. Now, come to the dividend decisions. Now, whatever the money or the profits which company earned after paying expenses, after meeting interest, and after paying taxes, after paying preference dividend, whatever the profits available to the equity shareholders, out of that profit, how much profit the company is going to distribute as a dividend to the shareholders. Now, this is going to play an important role. So, there are different theories here. Now, how much the profit should be retained, that is called retention ratio, and how much the profit which should be paid out, that is called payout ratio. If payout ratio is 60%, retention is 40%. Based on the future requirements of the companies, they want to retain more, they will retain for further investment, or a company which wants to announce more and more amount of dividends, they will retain less and they will announce more as the dividend. So, ultimately every company is having its own dividend policy. The dividend policy may be a rigid dividend policy, the dividend policy may be a liberal dividend policy, and according to their own dividend policies, they will go with the announcement of the dividend. Now, according to that, ultimate aim is to maximize the wealth of the company, or the market price of the share must be increased. There are two types of arguments, one is relevance, another is irrelevance. So, relevance theories and irrelevance theories. Now, relevance theories are Walter's model and Gaddam's model. These two models talks about the relevance of the amount of the money which we have to retain, and one amount of the profit which we have to pay. So, according to that, these two theories which are classified the companies in an industry into three categories. The companies are the forms which are a growth form, a declining form, or a normal form. So, when you call it as a growth form, the growth form is nothing but R is greater than K, there the internal rate of return is greater than cost of capital. So, which is called a growth form. In the case of growth form, here we have to retain the amount of money, and we have to invest further and further, we can get more amount of profits from this. And second is declining form. In the case of declining form, you can pay out the amount of dividend. The payout ratio is 100. When payout ratio is 100, the share price is higher. Now, in the case of a normal form, you can retain or you can pay, the share price is not going to be affected. So, these are the two important theories which concludes about the dividends. Now, the irrelevance talks about the hypothesis. Malgodian and Miller, the theory which is developed and call it as irrelevance. Now, in the case of when the dividend is paid, what is the market price or the value of the company? When the dividend is not paid, what is the value of the company? In both the cases, the value of the company which is not going to change. That is proved by the Now, this is about in detail the dividend decision. So, these are the three important aspects or the functions which we have to remember. So, whatever the different topics which maybe comes under the financial management, the topics which are very much linked to these three aspects. It may be comes under financing, it may be comes under investing, or maybe comes under the dividend decisions. Now, for example, we have the leverages, we have capital structure and capital structure theories like. Now, these are all the various topics which are also included in the financial management. Now, I request the Sanjeeva Rao sir to continue.
From examination point of view, the financial management is handled by the finance manager. As Professor Naresh Reddy has specified, the financial manager has to take three important decisions. One is financing decision, investing decision and dividend decisions. From examination point of view, they may ask a question with all these decisions, and they also include the other answer like profit. So, the question will be, what are the decisions which are not included in the decisions taken by the manager, finance manager. So, whatever is the option that we have, based on that we have to tick the answer. Similarly, as sir was also pointing out, the various the factors like wealth maximization as one of the objectives of financial management, the primary area is how to value the firm. So, value of the firm will always depend upon the value of the share. If the share value is more, the value of the firm is greater. If the share value is less, the value of the firm is less. So, based on this, some questions may be asked under multiple choice questions. And secondly, the expenditure which is spent for investing in long term projects or long term proposals, we call it as a capital budgeting. Now, I would like to hand over to Professor Naresh Reddy sir to speak on capital budgeting.
Yeah. Now, in the case of capital budgeting, which is a long term investment decision, which is also called irrelevance in nature. Once the money which is invested, now we are not going to get into this. For example, investment in technology. Now, investment in technology, crores of rupees the companies are investing in technology development. Now, for example, the apps which are developed by the different companies for the purpose of payments and other, and the internal management or internal operations also they are using different technologies in different organizations. Now, we may be expecting whatever the money which is invested in a particular X technology. Now, we predicted that this technology will be there for the next 10 years or next 5 years, for example. Now, the huge amount of money which is invested, that technology is changed within 1 or 2 years, but the amount of money which we are not going to recover, it is very difficult. Now, for the purpose of that, what is the type of investment? Is it investment in technology, investment in machinery, investment in equipment? Now, not only that, we are talking about ESG and all. Now, the net zero emissions like. Now, for example, we can take automobiles. So, they are investing huge amount of money in engines. Now, updation of these engines and these new models which are going to reduce the pollutants or emissions. Now, for example, we have BS6 model. Now, we are into BS 6.1, BS 6.2. So, what is the difference? The difference is the emissions are reduced by the companies by doing R&D, and every year or every periodical revisions, they are releasing the new models into the market. Now, according to the rules and regulations which are framed by the government, now the models which must be go with what are the norms which are there, the BS standards, which BS standard is there at present. Now, according to that, they must develop the technology, means huge amount of money which they will invest. If the emissions are not reduced, now they can't release the product to the market. Now, that type of issues are there. Once you are investing in technologies, or once you are investing in research and development, it may be in the case of a pharmaceutical companies, huge amount of money they will invest in the research and development to develop a drug. So, that is also a capital budgeting decision. Now, construction of the office building, construction of the factory building, purchase of different machineries, equipment. Now, these are all comes under capital budgeting. So, huge amount of money the companies committed to invest, but how many number of years this money which is recovered by the companies. Now, for the purpose of that, we have different techniques to be adopted.
Now, I would like to interrupt before that, sir. As sir specified about the capital budgeting, any manager before investing in any project, he has to undergo with certain steps. We call it as steps in capital budgeting. We also call it as a process of capital budgeting. In examination, they will ask what are the steps involved in the process of capital budgeting. Sometimes they may give in an order, or sometimes they may give in disorder, and they ask you to arrange them in an order. So, first one is identity of the proposal, identification of proposal. After that, screening, and then evaluating, reviewing. So, there are 4 steps or 5 steps depending upon the type of investment the manager is going to invest in a project. So, capital budgeting process will also be covered in an examination, and you have to focus on that.
Next. Yeah. Now, that based on these issues, for example, you can go with the techniques part. Now, there are 2 important types of techniques. Now, one is which is traditional techniques. Traditional is very simple. These tools are the techniques whatever we are going to use, which are not going to consider the time value of money. So, I already explained the time value of money is very, very important in finance decisions, but these tools which are not considered the time value of money. Now, for example, we can take payback period method and accounting rate of return method or average rate of return method. Now, in the case of accounting payback period method, now this method is a very simple method. Now, even most of the business people, even they do not know the knowledge of the finance also, they are using this method. For example, you may ask your friend to invest in a particular startup. What you will question immediately? The question is, in how many number of years I am going to recover my amount of money which is going to be invested. That is nothing but what? Payback. So, in how many number of years the invested money or the funds which we are going to recover or recoup, that talks about the payback period. So, for example, the money which is invested is 1 lakh rupees in a small investment. Now, if its life is 10 years, so every year the amount of money which they are going to receive is 10,000. Okay. Now, 10,000 means in how many years they are going to recover? It requires 10 years. But for example, you can go by 20,000 rupees they are going to get in this particular project. In 5 years they are going to recoup. Now, that is why they will check how much money which they invest and what is the inflow which is there in the each and every year, and according to that in how many number of years the money will be recovered. So, this is a very simple calculation. How many years the life of the investment or the asset or a particular project, and according to that every year how much money which is going to be generated. According to that simply they will calculate.
In this respect of calculating payback period, whatever the cash flow that we call, we always consider, in examination they will ask a question, what is cash inflow in case of calculating payback period. Cash inflow is always profit after tax but before depreciation. Mostly students will ignore this part, and the calculation of payback period lies with a simple formula where the cash inflows are uniform, where the cash inflows are non-uniform. Where the cash inflows are uniform, a simple formula is used. Payback period is equal to total investment divided by annual cash inflows. Suppose we are investing 1 lakh rupees and our cash inflows are 20,000 uniformly, then payback period is 5 years. So when it is non-uniform cash inflows, then you have to apply another formula with certain steps calculating cumulative cash inflows. Then you will have what is the payback period. So always remember, for examination purpose, cash inflow under payback period is always equal to profit after tax but before depreciation.
Yeah. Now there are two important statements every commerce student must learn. One is cost statement or the cost sheet, the other is income statement. So sir already explained about that income statement. So how we have to begin? Sales minus variable cost, we will have contribution, minus fixed cost, we will have EBIT, earnings before interest and tax, and subtract interest, we will have earnings before tax, and subtract the interest, we will have earnings after tax, and this amount is the depreciation is added back, because depreciation is not an expense. Now this is a cash one, only for the purpose of the profit and loss account adjustment, and for the purpose of tax benefit we will debit to the profit and loss account. So depreciation is added back, that is nothing but cash inflow, so our annual cash inflow. So that is the way the annual cash flows are calculated, and this annual cash flow is the concept which is used in all the techniques except accounting rate of return or average rate of return. It may be a NPV technique or IRR or profitability index. In all the cases the cash flow concept will be very much used. Now come to this particular method, the limitations are the time value of money is not considered by the payback period method, and not only that, if these two similar projects are there, a project which is giving more initial cash flows, a project which is giving more the slog cash flows. In the case of these two companies or the two projects which is giving more initial cash flows, that project will be accepted, the other is rejected if the other project may offers more amount of cash flows after its the payback period, that is not counted. So this is the very important limitation of this particular technique or the tool. Now the second is accounting rate of return or the average rate of return. Now we know very well the accounting concept is to be considered. In the case of accounting concept, we will go with accounting profit. So accounting profit is what? Earnings after tax. So all the expenses which are subtracted, and not only that, the interest amount, tax amount also which is subtracted, and depreciation is not added back, depreciation is also subtracted, and that is the money which we have to consider. So earnings after tax is divided by initial or the original investment into 100, we will express in percentage here. So payback period is expressed in the number of years. Now the accounting or the average rate of return which is expressed in the percentages. So in the case of this particular tool or technique, simply we will take the data from the financial statements and we will calculate the accounting rate of return. So a project which is offering higher the rate and that project is accepted, a project which is offering lower and that should be rejected. So generally we are talking about mutually exclusive projects. So that is important. If you select project A, immediately project B will be rejected. Now we have different alternatives. There are too many projects are there, or for example, I want to buy a machinery. Okay. So for example, you want to buy a computer. In computer there are different models, there are different companies which are producing. It may be a desktop or maybe a laptop or maybe any machinery, right. We have alternatives, and according to these alternatives, what we will do here is, we will calculate the payback period or accounting rate of return of all these alternatives. These are called mutually exclusive investments or the projects. Out of that, what we will do, a project which is offering higher rate of return or which is having lower payback period, that should be accepted according to these two techniques. Now, our intention is that we want to earn more and more, and this leads to what? This leads to, we want to maximize our profits, we want to maximize our earnings, and ultimately we want to improve the market capitalization. And the important challenge to the finance manager like marketing manager is how to retain the existing investors and how to attract the new investors into our company. For example, you can go with the marketing. Now, what is the challenge to a marketing manager? How to retain the existing customers and how to attract the new customers. This is the challenge to the marketing manager, and this is the challenge to the finance manager. That is why finance manager is trying to improve the amount of profits in the form of the wealth which she wants to maximize. And now we have to move on to the second type of techniques, which is called discounting techniques, which are also called modern techniques.
So, I would like to add one point. While calculating accounting rate of return, there may be multiple choice given to the candidate. So, in simple, how do you calculate average rate of return? First, we take average profits and then divide it by the average investment multiplied by 100. Sometimes we take average investment, sometimes we take the total investment. The very purpose of taking average investment is, in certain number of years, what is the exact amount of investment that we are making cannot be calculated for using average rate of return method. For that reason, average investment is considered. And additionally, working capital and scrap value is also considered. So, one bit will be average in profit divided by average investment, second will be profit by total investment, third will be either average profit by average investment, then we will have working capital and also the scrap value. So, whenever we are taking average investment, we take the total investment minus scrap value divided by 2 plus working capital minus scrap value. We are adding back the scrap value because we are going to get this money at the end of the life of the project. So, like that there may be 4 options given and the candidate has to choose right option. Now, third part.
Yeah. Now, we have to focus on the discounting techniques. There are different discounting techniques. Now, even for the purpose of the examination, now also we have to discuss important tools here: net present value, internal rate of return and profitability index. These are the 3 important techniques which we have to discuss under discounting techniques. Now, as per the first one, even the objective of the financial management is maximization of the wealth of the shareholders or the stakeholders. Now, this is there with the help of NPV technique or net present value technique. Now, what we will do here, the technique is very simple. We want to compare the total present value of cash inflows with the total present value of cash outflows. If total present value of cash inflows are more than the total present value of cash outflows, then we have a positive value, that is NPV is greater than 0. When NPV is greater than 0, the project should be accepted. When NPV is negative or less than 0, the project should be rejected. Now, according to that, so what we have to consider under the NPV techniques? Now, we must take
present values.
The present values, and the important point is, in the case of as a student, the most of the details are supplied, but as a finance manager in our practical life, nothing is supplied. You have to get the data from your company. So, what are the important aspects which you require for every technique or the tool? One is cash inflows over a period of life of the investment or the project or asset, cash outflows, It may be one time or it may be series of outflows are there. Certain projects requires outflows for a period of 5 years, 3 years, 4 years. Like for example, you can take metro. Metro investment is not in 1 year. They invested 4 to 5 years and they laid the metro the track, and according to the now they are operating. So, but some projects requires only one time investment. Okay. In the case of one time investment, there are no series of investments. Now, according to that, what is required? We require the inflows, we require the outflows information, we require the life of that investment or the asset or the machinery, whatever it is, and the scrap value of the asset. Now, the rate of depreciation, method of depreciation, like this, these are the very important elements or the information which is required to work out the problems and according to these tools. Now, not only that, in the case of NPV, we will also require additionally discount rate. That discount rate must be also given in the problem itself.
Sir, I would like to add one point. Discount rate is also called differently. One is cut-off rate, hurdle rate, rate of return. They call it in different names. They also give it in the form of options. Sir, as we are running short of time, we will have to cover the other chapters also. Let us speed up. Capital budgeting techniques and net present value is done.
Yeah. So, next, internal rate of return is, we will go with the comparison of inflows and outflows, the present value of inflows and outflows. At what rate the inflows and outflows are equal. Now, simply that rate is called internal rate of return. So, ultimately NPV is equal to 0. So, when NPV is equal to 0, that rate is becomes the internal rate of return. Now, in the case of the profitability index, we will compare the inflows and outflows by inflows, and we will express in times. So, if it is more than 1, less than 1, equal to 1, like if it is more than 1, we will accept, otherwise we will reject the project. So, these are the important tools or the techniques which comes under the capital budgeting.
Yes, sir.
Yeah.
Sir, internal rate of return is also otherwise called, they will ask a question. It is called trial and error method, because we go on trying what is the rate of return that we are going to get. Next, sir.
Now, we have to move on to the other topics, cost of capital and leverages, like we have capital structure. Now, cost of capital is the minimum rate of return or the required rate of return. Now, this is very important in the case of capital budgeting decisions, because we have to select the cost. And not only that, this will connect the financing and investing decisions. Now, for example, in the case of investments, how much return you want? How can we know? We know based on this money, whatever you want to invest, this money is already raised from different sources. Now, for example, you can take
equity,
any project, like it may be a metro, it may be other type of investments. What they will do, they will mobilize the money from the consortium of banks in the form of long term loans, and they may also issue equity shares in the market. They may issue the debentures or bonds or preference shares. Now, like that, these are all the different long term sources of financing, and every source is not free of cost, every source is having some cost. Now, according to that, now based on the theory, so what theory says, the cost of debt is less than cost of equity, and simply we will call it as debt is a cheaper source of financing compared to the equity. Now, we have the leverage effect or the advantage which we want to take up by using the debt capital into the capital structure. Now, why this debt capital is important? Because we have a tax advantage. Now, for the purpose of getting tax advantage, we will go with the composition of debt and equity into the capital structure. So, anyhow, there are different theories in the capital structure. What is that? How much composition of debt and equity is required to a particular firm or the particular investment decision. Now, the composition may be it is 50-50, 60-40 like, or 70-30. So, here we have a concept which is called optimum capital structure, a capital structure which offers higher the value of the firm and lower the weighted average cost of capital, which is called optimum capital structure. Now, that is why here optimum is how much, that you can calculate with the help of the theories which is already there. Now, in the case of even capital structure also there are two types of theories. One is relevance and irrelevant, relevant theories and irrelevant theories. Now, we have net income approach, this is a relevant theory. Irrelevant theory which we have net operating income approach. Now, we will also have in between, that is called traditional approach, and we will also have a approach, right. The approach which is used by the, if arbitration is there, if arbitration is not there, if tax we are going to consider, if tax is not considered, like different options which are worked out by the in the case of capital structure theories. So, as a student you can also try to read in detail the nature of each and every theory and what the crux of the each and every theory, and not only that, what are the assumptions of every theory, and how we have to find out the value of the firm, and how we have to find out the cost of capital, and ultimately we have to try to find out the weighted average cost of capital. That is very much important, because we are using 2 types or 3 types or 4 types of sources of financing. And at that when I want to continue this cost of capital, there are 2 types, one is specific cost of capital, another is weighted average cost of capital. So, specific cost of capital consists of what? The cost of equity, cost of debt, cost of preference, cost of retained earnings. If a company is going to use 4 types, now they will go with these 4 specific costs, or a company is going with 2 only, 2 sources. Now, according to that we will go with 2 types of specific costs. Ultimately, we have to work out for the weighted average cost of capital. That weighted average cost of capital is very much useful in the case of investment decisions. So, for example, your weighted average cost of capital is on the whole is 10%. Now, whatever the money which is mobilized from different sources, that money is, for example, 1 crore, this 1 crore you want to invest in a particular project, and how much we have to earn on this particular project, it is more than 10%. That is why this cost of capital is going to be very much important in the case of investment decisions. How much cost we are paying, how much return which we have to earn.
In examination, there may be questions relating to cost of debt before tax and after tax.
Before tax, after tax. If the debt may be redeemable, irredeemable, like. So, you can also try to work out simple problems without using calculator. Calculators are not allowed in the examinations. That is why simple problems we can also try to work out, and according to that you can go with this. And we are also having this leverage effect and operating leverage, finance leverage, and even combined leverages. Its calculation. Now, when we have to calculate degrees of leverages, when we have to go with only leverages, like. Now, these are also to practice, and we will also having dividend decisions which I already explained, and working capital. Under working capital, estimation of working capital is one, and the working capital or the operating cycle is the another concept, and different types of working capital you can also try to focus on it. Sources of this working capital financing, and we will also try to focus on the cash management, receivables management, and inventory management. So, questions may be also framed from these important elements, because working capital majorly consists of the cash, and majorly is also consists of the receivables and inventory also. So, that is why questions may also framed from these aspects, like
about operating cycle.
Not only that, inventory management in the case of these tools and techniques.
Yes.
So, EOQ, stock levels,
ABC technique,
ABC analysis, VEDA analysis, FSN analysis. Now, just in time technique, like these are the different types of techniques which are there, and each and every technique it is having its own importance and limitation, and according to that you can also try to prepare on this.
So, in examination several topics are covered, not only financial management, other papers are also covered, and presently the latest information that everybody knows is information technology, and number of questions will be covered on e-cash, then smart cards. We also have statistics. In statistics we will have parametric tests and non-parametric tests. Similarly, we have economics, managerial economics, what is cost analysis, We have to cover so many subjects, and then multiple choice questions are also covered in order to attempt, and there are certain number of standard books available in the market. The students have to focus on concepts and application. If you are learning concepts, definitely you know how they can be applied through different ways, in different ways. At the same time, you can attempt all types of questions, and from examination point of view, students can score 100 out of 100 in commerce, because there is ample opportunity for the students to attempt all the questions timely, and then they can score good marks.
Yeah. Now, in the case of how to prepare this paper 2 commerce, important thing is first select the standard books. Don't go with any other material. First is standard books. Now, prepare the notes on your own and read out the what part and why part. These two are important. Once you know the conceptual clarity, the question may be framed in any manner. Now, you can answer. For example, question may be formed in the form of it may be the true or false type, or you can go with fill in the blank, but anyway the alternatives 4 are given. Now, under alternatives 4, one alternative we have to try to identify. Now, all MCQs are there. Within the MCQs also, they will go with, for example, a matching. If left hand side, right hand side will be given, and matching also given, and which matching is the correct matching, like you can also try to identify. So, when you know this you know, when you study in detail the textbooks and the conceptual clarity is there. Now, it is very easy to attempt the questions. It may be formed in any manner. So, some of the students, what they will do, they will straight away purchase the question answers books, and they will practice the question answers. So, how many bits you can practice, like thousands bits also you can practice.
Yes.
It is very difficult to get in the examination. Now, the paper setter also, what he or she will do, they will set the paper by reading the textbooks only. According to, after reading a particular paragraph in a particular chapter, they will frame a question from reading only, and according to that they will identify the alternatives, and these alternatives also they will identify very much similarity in nature, because they want to confuse you. Now, that confusion you must try to avoid when you are reading in detail, and when conceptual clarity is there, it is very easy to answer the multiple choice questions. Otherwise, you have a lot of confusion, is A is correct or B is correct or C is correct, the AB is also looking correct like, or ABC also looking correct like. This type of confusion will be there in your mind, and you will lose the time also. So, time is same for all the students, and those who are the clarity of the concept, they are very much ahead compared to the other students in completing the examination within the time and attempting all the given questions in the examination.
So, you also focus on the concepts, very, very important. Sometimes they will ask the concept and the author who has contributed for that particular concept. So, you try to learn all the concepts and focus on the theories which were developed by several experts, like we have Taylor, Fail, and when you are attempting some question relating to Henry Fail, they simply say how many principles are framed by Fail. So, there are 14 principles. Similarly, there are some questions. Take the example of marketing management, and in case of marketing management, what is marketing mix? What is marketing strategy? Everything you have to consider, and then frame according to the question what will be the answer. You have to tick the correct answer with the confidence. That gives you greater scoring. So, I would like to hand over to Professor Naresh Reddy sir to give remarks.
Yeah, like this the various other units also there. Actually, we have 10 units.
Yes.
It is very difficult to cover the 10 units within the given time. So, we will continue in the even next time, but this time here we have considered the first unit, which is comes under financial management.
Yes, sir.
So, most of the topics which we have discussed in the case of this financial management, and the type of questions also we have discussed. It may be a question will be given like which formula is correct relating to combined leverage. Now, they will give you like the operating leverage multiplied with financial leverage, operating leverage minus financial leverage, operating leverage plus financial leverage, like that the options will be framed. Now, out of that, how you know this? So, when you thoroughly read the theoretical aspects and the important concepts related to the leverages, when that only you are very much in a position to answer it. And questions also, out of the total number of questions, some questions are easy, some questions are related to recollection of the past information, and some questions may be moderately given, some questions are very much difficult, some questions are very difficult. So, like that even paper setters also what they will do, they will divide the given total number of questions into 3 to 4 categories. Some questions are very easy to answer, within no time also you can answer. So, who is the father of scientific management, like? Yes. Immediately you can search for where that name is there, which you already know.
F.W.
Taylor, like. Now, like that these questions are very basic questions, and which are depending on the recollection in nature.
Yes.
Now, once you read this particular aspect, now it is very easy to recollect. That answer is there in the four alternatives, you can search it very easily. Okay. Now, like that these are the certain easy questions which will be there in the question paper, and some of the questions it takes time, some of the questions you can also work out by using the paper and pen. You can calculate, simple calculations may be given, it may be related to accounting, related to finance, related to statistics, like a small, for example, if you can take the statistics. So, some numbers series will be given, based on that try to find out the average of these numbers or weighted average of these numbers, like a small simple problem is given, and according to that the answer is also given, but you have to work out by using the formula and you will get the answer. So, that answer is matched with the given alternatives or not, you can search it. Now, anyhow, first you have to read thoroughly whatever the syllabus is given, and according to the syllabus you have to prepare, and later you can try to practice the bits, and according to that where you are having a mistake which is committed in identifying the alternative, like you must go back to the basic principles of each and every concept, and according to that you can get a clarity.
Yeah.
And according to that you can also speed up and take the put the time and the clock you can put, and the answer the questions.
Yes.
And how much time you are taking also you can observe it, and based on that when you are practicing within less time also you can complete the examination or the test. So, if you want to practice it, first you have to focus on reading of each and every topic.
So,
thoroughly.
We have very important areas like financial and management accounting, wherein you also have to concentrate on the comparative analysis, common size analysis, trend analysis. While calculating common size analysis, what is the common? So, 100 is the common. Like that, in comparative analysis you will have certain important areas like how to calculate a relative measure, how to calculate absolute figure. All these are very important, you have to focus on, and the most important in the management accounting is ratio analysis. So, there is a classification of ratios, profitability ratios, turnover ratios, capital structure ratios, and current ratios. So, short term solvency ratios. So, the ratio analysis is also very important. Students have to focus on the formulas of all the ratios. So, simple problems will be covered in examination, and you have to attempt the questions. And while attempting the questions, first read the question thoroughly, understand it carefully, and then try to attempt out of the 4 options given to you in examination.
Yeah. Actually, the tools and techniques which we have to use for the purpose of this financial analysis. So, we have with the financial statements in our hands. So, this is every annual report consists of the income statement, the balance sheet, now the cash flow statement, like.
Yeah.
But out of this we want to know the performance of that particular company in the form of various ways. So, it may be by using ratios, by using the funds flow concept, by using cash flow concept, and by using comparative, common size, trend analysis like. Now, the investors or the stakeholders, they will select one or more number of tools for the purpose of evaluation of this health of the company. So, the financial position, the profitability, the liquidity, the solvency, etc., which is calculated with the help of the various ratios. It may be in the form of ratio analysis, and you must try to thorough with the formulas which Professor already pointed out. And not only that, the funds flow, cash flow, the difference between the funds flow and cash flow, and not only that, the even marginal costing, which is also included in this particular topic, financial and management accounting. There are different decision making techniques also, make or buy, add, draft. So, you want to close the business or a particular product line, like that there are different alternative decision making. That alternative decisions also you thoroughly read out, and according to that you can also try to work out the problems. Few simple problems also you can work out in the case of the marginal costing, the cost volume profit analysis, contribution, break even analysis. Break even may be in units, it may be in rupees value. Now, not only that, the margin of safety. Now, according to that, these are the certain important calculations which will comes under the marginal costing. You can also thorough with these all aspects. Now, come to the third aspect, which is their cost accounting and control. Now, I request Professor to speak on
cost accounting and control are very important areas. As we have covered management accounting and financial management in the past, so they are dealt by the managers, and the cost accounting is totally taken up by the cost accountant, and a cost accountant should have the complete knowledge relating to various aspects like cost concepts. So, we have very important cost concepts, and next we have elements of cost which are very, very important: material, labor and expenses. Similarly, we have different methods of costing, and where these methods of costing are used are to be focused by the students. So, under methods of costing we have unit costing, job costing, contract costing, uniform costing. Like this we have different methods. Similarly, we have techniques of costing also. We have marginal costing technique, budgetary control technique. Okay. So, the techniques are very important from examination point of view, where in budgetary control number of budgets are prepared, like sales budget, production cost budget, cash budget. So, simple problem will be given like material budget also, then you have to attempt with a simple calculation, and how the production units are calculated, how the sales units are calculated. Simple problems will be covered in the budgetary chapter.
Now, I interrupt Professor. So, students may be confused with these three subjects, cost accounting, financial accounting, management accounting like. Now, in financial accounting we have certain limitations. The important limitation is the cost data per unit which is not supplied by the financial accounting, or the financial accountant role is not to present cost per unit. So, the financial accountant role is very simple. In toto he or she will present, but in the case of cost accounting, now we want to ascertain the cost of each and product or the service or different units of the products. Now, according to that, our focus is very simple. In the case of cost accounting, the focus is how to minimize the cost and how to control the cost. So, these are the basic objectives of cost accounting, and according to that we must try to know the cost of each and every product or the service. Now, with this, now Professor already explained the elements of cost. Now, the elements of cost, which is direct material cost, direct labor cost, direct expenses and other variable overheads which are also there, fixed overheads are there. And here we want cost data, and with this cost data what we will do? We will ascertain the cost of a product or service. Now, how we can ascertain the cost of a product or service? We will ascertain with the help of the cost accounting methods. The methods also which are shared by the professor, the method is unit or output costing, job costing, process costing, contract costing. Now, like this we have different methods. According to the type of the industry, the suitable method will be selected by the cost accountants. Ultimately, they will try to find out the cost of that particular job or cost of that particular contract or cost of operating 1 kilometer of a particular truck or cost of operating 1 kilometer one passenger of a particular bus. Like this we will try to find out the cost. So, this is required for the purpose of fixing the selling price. The selling price which is fixed based on the cost which is incurred by the firm. Now, according to that only the selling price per unit is fixed, otherwise it is very difficult to fix the selling price per unit. Now, these are the methods. You please try to read out each and every method and how the cost which is calculated by using these methods. Now, it may be for example, process costing. So, what type of ways which you can calculate the cost of each and every process, and some of the companies they do not want to go up to the final process. Now, if you sell in the market after completion of 1 or 2 processes, if you may be getting profit more than by completing the product. Now, according to that you can try to observe the competitors, the prices which are charged by the competitors in the market, and according to that where we want to stop also we must try to know. Now, the other part of it is techniques of costing. So, you know very well the techniques are very much important to reduce or to control the cost.
Yeah.
Now, for the purpose of reduction or controlling the amount of cost, we require certain tools or techniques. These are marginal costing, budgetary control, standard costing. So, like that uniform costing, interfirm comparison. Now, these are the techniques which we have to use and try to reduce the cost of a product. Why the need or necessity to reduce the cost of a product or service? Because competitors are there in the market. For example, there are the companies which they are producing bathing soaps. Okay, the purpose is very simple, to clean our body. Now, the soap which is going to be used. Now, how many brands which are there in the market? If the one company they are producing different types of brands. Now, the soaps which are targeting kids, the soaps which are targeting male, the soaps which are targeting female or old age, or not only that they are targeting nature of the skin. According to the nature of the skin, the ingredients which are there in the cake of the soap, and according to that these are the targets which they are targeting, and the competition is huge in the market. So, those who are fixing the lesser the price, and those companies which are there in the market to a longer period of time by selling or attracting more number of customers in the market. That is why this is a big challenge is there to the cost accountant, how to reduce the cost. So, this is the major aspect which will comes under the cost accounting and control. Now, the other aspect is managerial economics.
Yes.
I request
Next
the
chapter
professor.
is managerial economics. This is very important chapter, and already the students have learned what is economics, and this managerial economics is also called as business economics. Number of books are available in the market, and first you have to know the meaning of managerial economics. So, whatever is the economic concept that is applied in the organization for taking decisions, we call it as managerial economics. And we also have to focus on the nature of managerial economics, whether it is a positive, normative, what is the nature of managerial economics. Then what is the scope of managerial economics, what are the areas that are covered. So, under the scope of managerial economics, we will have demand, product, cost analysis, market structure, perfect market, imperfect market, and we have other markets also, but as per the syllabus we have only up to perfect market and imperfect market. So, in these areas you have to focus only on the concepts. So, what is demand, why the demand curve slopes downwards, and what is the intersection point which we call it as equilibrium, and what will be the application of kinked demand curve. So, all these are to be learned by the students and focus on this. So, not only that, product and cost analysis also to be given lot of importance, and while calculating cost analysis, we have to understand what is fixed cost, what is marginal cost, that is variable cost, what is the average cost, and how the firms are going to attain the maximum profit at an equilibrium point, at the same time at the average cost, minimum average cost. So, that should be focused by the students, and we have different markets. So, we all know what market is, a place where the goods are purchased and sold, and we have different markets, perfect market and imperfect market. You have to focus on the features of perfect market and features of imperfect market. How the cost is determined in case of perfect market and imperfect market. Next, we have organization theory and behavior. We have different theories. Organization, a question may be asked in examination, whether organization is a noun, is a verb, or an adjective. So, you have to understand whether it is an establishment. Sometimes you can take it as a noun, because every organization will have a name. So, organization can be taken in some examinations, they asked whether it is a noun or verb. So, such a simple question may also be asked about organization. We have different organization theories. We have traditional theories and modern theories. In traditional theories, we have been covering various theories, but in modern theories, we will be focusing more on the situational analysis. So, some questions may be covered under situation analysis, and next we have individual versus group behavior. In every organization, when we talk about organization comprises of individuals, and when group of individuals are there, then we call it as a group, and any number of individuals, 2 or more than 2 are called group. So, the behavior of individuals, behavior of the group of individuals will have greater impact on the organization and its success. So, for that there are certain concepts like motivation and morale. We have several motivation theories, and the most important one is Abraham Maslow's theory of need hierarchy. We have physiological needs, safety needs, security needs, esteem needs, self-actualization needs, which is framed in the form of a pyramid. So, you have to focus on that, and we also have existence, relatedness and growth, Alderfer's ERG theory. We also have theory X and theory Y. So, in motivation chapter, number of theories are available. So, you have to focus on different theories and what are their contributions. And next we have communication, which is also very important part in any organization. So, we know communication is the process of passing the information from one person to another person. There are different types of communications. One is oral communication, written communication, and we have the communication which is made only by gestures, okay, which we call it as verbal and non-verbal communication. Yeah. And at the same time, we have certain barriers of communication. So, these barriers will also be asked in examination. Actually, in the general examinations, they will ask for 10 marks, but we have very few multiple choices for barriers, and language is one of the important barrier, because one person may speak in one way and dialect may be different. That can be one of the barriers. Similarly, we have leadership theories and leadership styles. So, leadership theories and leadership styles by Likert, Rensis Likert, are very important. So, we call it as style 1, style 2, style 3, style 4. So, you have to focus on whether it is democratic style or autocratic style. So, on these different styles you have to focus, and then the importance should be given. Next chapter and next unit that we have is marketing management. So, you have to understand what is the concept of market and what are the different concepts in marketing management. You have selling concept, you have product concept, you have societal concept. Like this, we have different concepts in marketing management. Marketing management covers wide area, and we cover it under marketing environment. And every market will have a consumer. You and I are consumers. So, how the consumer behavior will have an impact on the marketing environment, and based on the consumer's behavior, marketing segmentation is done. So, the concept of marketing segmentation should be focused by the students for examination. And in our marketing management, the most important question is marketing mix. Sometimes they will give you price, place, promotion, and the other part will not be the part of marketing mix, and they will give as a question as any other option given by the examiner. So, once you know the marketing mix concepts, then you can easily attempt that question. So, next unit we have human resource management, which is very, very important for every organization. In that we have HR functions. HR functions include the most important area to be focused on the recruitment and selection. Both are not same. Recruitment is different and selection is different. So, selection is the process of identifying the right person for the right job out of the total number of applications available for the job. So, we have to understand how HR manager will exercise his functions as a HR person, and similarly we have HR planning, job analysis. Job analysis is one area where some questions may be asked. Next we have recruitment and job evaluation, training and development methods. So, training is very important. Once the incumbent is placed in a particular place, there will be two types of trainings. One is on the job training and off the job training, and there are development methods which are adopted differently by different organizations, like in order to increase the ability, skill, maybe administrative skill or technical skill, the employees are given training, and that becomes the part of the development of an employee in the organization. And we have performance appraisal methods. We have different performance appraisal methods. In examination they may ask you 360 degrees of performance appraisal method. And next we have trade unions, and trade union is very old concept, and at present, because of the awareness about HR policies to every employee, very less trade unions are there, and collective bargaining is one important area under HR management. So, only one question may be asked under collective bargaining. Next unit we have business environment. So, in business environment we should understand what are the components of business environment. So, there are 4 important components, you have to focus on those, and especially as the examination is conducted by the Telangana government, you have to focus on Telangana industrial policy. And we have liberalization, privatization and globalization, which we call in short as LPG policy, and after 1991 policy, which has been adopted by several states and central government, we have seen greater growth in our economy. And
okay, I want to continue. Now, in the case of business environment, we have 2 important aspects: internal and external environment.
yes,
How a particular decision which is influencing. Now, it may be production, or it may be marketing, finance, HR, whatever it is. The environmental factors are influencing. So, according to that, we must try to know how these environmental factors which are influencing a particular decision. Now, that is why with these changing environment and different initiatives which are there in the country like India, now the policies which are very much liberalized, privatized, and because of this globalization. Now, we have the other important topics which are given: Indian capital markets and foreign direct investment. Like, now there are different markets. We have the capital markets, money market, forex market, now commodity market, derivative market, like. But here is they are specifying only Indian capital market. In Indian capital market, you know very well. Now, we have a spot market or cash market, which is these securities are traded in the market. You can pay the amount of money and you can get the shares or debentures, bonds, mutual funds, whatever it is. Now, we require the demat account, and these are the formalities when you fulfill, and you will be allowed to trade online. And this capital market is also very much meant for the companies which they will mobilize the money for the long term requirements. So, whatever the instruments which are issued in the IPOs, initial public offer. Now, according to these initial public offers, the money which they will collect, and this money will be invested in the capital budgeting decisions. Now, the 2 aspects are: one is primary market, which I already shared with you, that IPOs, initial public offer, or the new issue market. Now, companies may be coming for the first time, and they want to mobilize the money from the market. They will issue the securities, in the form of equity, debenture, bonds or preference shares like. And the company which is already issued and they want to have the further amount of capital, which is called FPOs, further public offers also there in the market, and they want to expand their business operations, they want to renovate, innovate, like that. These are the different initiatives which the companies take, and according to that they will mobilize the money. Now, that is very much possible through the IPO market or the FPO market. And second aspect is, if you maybe purchased in the shares or applied the shares in the IPO market, you want to exit from the market after some time. Now, it is difficult when the secondary market is not there. That is why the secondary market is created for the purpose of entry and exit. Continuously you can enter and exit any number of times. Now, according to that the trading will taking place in the market. And some of the important jargons which are used in the Indian capital market also you must try to learn. What do you mean by bull, what do you mean by bear, what is bull trend, bear trend, and what do we mean by market capitalization, what type of indices which are there in the market, what do you mean by the price weighted index, value weighted index, etc. And we will also have a concept which is called foreign direct investment. And ultimately we will have the quantitative techniques. This is one important subject you may be learning from your BCom degree as well as even in MCom degree also. These topics are very much there, and some of the concepts which you may be already learned in your schooling also, how to calculate averages, how to calculate a standard deviation like. And in the case of statistics there are two important aspects. So, one is the calculation parts which are related to the averages. Now, the range, mean deviation, standard deviation, like these are all comes under descriptive statistics.
Yes.
So, one part is descriptive statistics, which you have to very much comfortable with descriptive statistics and formulas, and the other part is the inferential statistics, which are talks about testing of hypothesis. You can take the tools of parametric and non-parametric tools, when we have to use these parametric tools, and when or for which type of data we can go with non-parametric tools like. So, because of
for quantitative information we use parametric test, and for qualitative information we use non-parametric
right
test.
Now, finally we have the last unit, which is called IT and e-commerce. Now, the e-commerce business which is growing
yes.
like anything, and most of this particular generation is wants to buy the goods through online, and even they are reading the description of each and every product they are offering, and not only that the payments are online, e-payment methods are there, e-cash methods are now. This generation is very less number of times they are going to branches, and most of the people they are avoiding to go to the branches, and according to that they want to use their credit cards, debit cards, online banking. Mobile banking is very much popular for settling all the transactions with the help of this speedy way of doing things, and we have so many advantages which are there with mobile banking and all. So, these are the 10 important topics which comes under this commerce paper 2. So, thank you for the opportunity.
So, with all these 10 units for junior lecturer and degree lecturer posts, it is necessary that the students should focus very much and score very good marks. We wish all the best to all the students. Thank you very much.
I wish you all the best.